welcome to the first quote-unquote chart of the day. It's a new series, and let's be honest here and upfront. It's not necessarily going to be every day, but I'm going to try to come up with something every day, a little bit of a technical lesson. Um, this will be a little bit different than charts that I point out for setups. This is actually geared a little bit more towards the beginner, so that you can kind of take a look at a chart and hopefully through time your eyes get used to seeing certain things, and you go ahead and kind of pick up the intuition, if you will, of technical analysis. Now this particular chart, I'll go ahead and slide it up, is soybeans. um, it's really all you need to know. It's just that it's soybeans. I am at barchart.com. I highly recommend the site if you want to look around the markets. It's a great free site. It's got plenty of different types of charts you can look at for a lot of different contracts. And in this particular case, this is the soybean futures. And on this chart, I have a couple things that I will point out to you. Number one, this is the MACD, and this particular technical indicator measures, it's a moving average crossover divergence is what it is. And without getting too technical with it, there are three different moving averages plotted, and then there's the divergence, the histogram and stuff is typically what you'll hear people refer to. There's 100 different ways to use this indicator, but one of the things that I would bring up, and if you happen to be familiar with a moving average crossover, you see that's what we're getting right now. The in this case, the 9 simple moving average is starting to cross with the 12 and the 26 rising above it. So we have a little bit of a cross here. And generally that means, like a moving average crossover system, that momentum's starting to shift higher. Now, looking at price, you can see this. You can plainly see this. One of the best things you can do when you're learning to trade is to try to think of trading, or charts I should say, as blocks. So there are definite areas where the market likes to congregate around and or consolidate. And if you look at it, you can see that there was definitely support here at the 1550 level, and 17 a bushel was, or 1700 was just far too resistant. Now what's happened is we've broken out of this area. Now there's a couple different ways to look at this. Number one, and there's a couple different ways to trade it. Number one, one of the tenets of technical analysis is that in a pattern, in this particular case, consolidation pattern, whatever that width is, whatever that height is, I should say, is your target. You broke out at 17, so this is 1.5, so you're basically looking at 18.5, which would be about the top of this chart. It's not quite pictured in this. So that's what you would be aiming for. Now, when you look at this, you can see that you broke it out. Now, there's a couple different ways to play this. You can either go long as soon as it breaks out, and that is the more aggressive way to approach it. Some people will wait for a pullback, because typically what was once resistance becomes support. So you could be trading this on a lot of different ways right now. You could be long now. You could wait for a pullback, and if there's some type of supportive action here at 17, you would go long. I will say this about waiting for this, though. Months went by, and the guys who were in my group, private group, got a good laugh about this, where I was waiting for the pullback to 1,000 for gold. It never happened. I think we pulled back to about 1,075. It was about as close as we got. So I never went long at that point. I ended up going long later, obviously, but I missed one heck of a move on that breakout because I was waiting for it. Conversely, though, you can get whipsawed. You can have fake breakouts. You'll be up here, and by the end of the day, you're back down in this area, and that's normally bad news. But looking at this chart, I see all of these things going on. And then lastly, you can make a little bit of a trend line. So here we go. We have a very benign chart. There's not a whole lot to it to really look at it. Obviously, it's in an uptrend. I think most people can see that. But I've laid this all out, and on top of that, by using technical analysis, I even have a target at this point, which is nice. And that's one of the great things about technical analysis, because unlike fundamental analysis, I can actually look for where to get in, where to get out, and where to aim for. As a general rule, if you fall back within this area and you get about halfway through the pattern, that's normally where people get out and they say, okay, well, things just didn't work out because nothing's 100%, obviously. But this looks very bullish. Soybeans should be bullish. This shouldn't be a surprise. On the fundamental side, of course, you have the drought, so it is affecting a lot of crops. Not so much soybeans. Soybeans are a little bit more resilient, but soybeans will take the place of some uses for wheat and corn. And as a whole, even though this market has lagged a bit, it should gain as well. Anyways, that was my first video. A little more long-winded than most of them will be. Hopefully, I'll have one pretty much every day when I'm not overly busy. If you have any questions, email me at chris@thetraderguy.com.